25 different sell-side analysts have given their estimates for Tesla's Q4 delivery number, which will come out at 9 o'clock in the morning Eastern Standard Time tomorrow, and the consensus is 480,483 deliveries. Gary Black says that if Tesla at least gives us 480,000, Tesla stock is going higher tomorrow. Piper Sandler recently came out and says they expect 507,000 deliveries in Q4 for Tesla. I have recently given my estimate of 510,000 deliveries. Here in this video, we will go over what the number is most likely to be. There's a very certain easy way of actually calculating this. We will also go over what I expect to happen with Tesla stock in this upcoming week and how you could actually see a flood of new capital entering into our markets. But first things first, let's break down what Tesla's delivery numbers statistically should be. So first and foremost, if Tesla beats or misses tomorrow, it all comes down to the US. If the US, well, had good demand for Teslas, then Tesla's going to beat 480,000 deliveries and come in, as I expect, 500 to 520,000 deliveries, a median target being around 510,000 deliveries. If the US was weak, well, Tesla could miss 480,000. It's because we just don't have a lot of data on the US. So what we're really trying to do here is just figure out what's the US number going to be? And I think I found the best way to do this. So typically, the US has more deliveries than China. Here you can see in Q1, the US delivered 23% more vehicles than China. In Q2, the US delivered 7% more vehicles than China. And in Q3, the US delivered 12% more vehicles than China. Now, for the first time ever, analyst, and this image is from Troy Teslike, is expecting China could deliver about 10,000 more units than the US. He has his estimate at 479,000 deliveries. So about 1,500 less than Wall Street consensus. So this next part seems pretty simple, but essentially what you're doing is finding the average beat compared to the US and China. So if the US does 23% more in Q1, 7% more in Q2, 12% more deliveries in Q3, the average of this is 14% more deliveries in the US than China on average in 2024. So if China delivered, as we know, 175,000 units, 14% more than that would be almost 200,000 units for the US. So this is, I guess, the most statistically relevant number that we could look at. 199,967 potential deliveries for the US. Now, if we go ahead and add back the China deliveries, 174,410, we go ahead and add what looks like the rest of the world deliveries, 33,455. We go ahead and add 10,356 for Canada. And then we go ahead and add 92,044 deliveries for Europe. You are at 511,232 deliveries. That would be if the US delivered 14% more vehicles than China, which is the average for 2023. Again, given these numbers here. So statistically, unless we've seen some weakness, some real weakness in the US this last quarter, you should see Tesla smash the delivery estimate coming tomorrow. Plus, I mean, just think about this logically. For potentially 100 million Americans that are going to have a tax bill due coming in the next 3 or 4 months, well, buying a Tesla made a lot of sense. And I think that's why we've seen a lot of inventory rundown across Tesla's inventory numbers in this latest quarter. I mean, I pretty much share these numbers every single day, but really from the middle of November until now, Model S, X, and 3 inventories are down thousands apiece. Model Y started falling towards really around December 8th. Model Y inventory went from 7,000 down to about 2,700. These are only inventory numbers, so we can't draw any definitive conclusions. But what this at least shows me is there was probably a lot of individuals that wanted to take advantage, last minute of course, of the $7,500 tax credit and the fact that you could get a Model 3 rear-wheel drive, the lowest price variant, and still get the $7,500 tax credit. So I find it more plausible than not that Q4 was probably a pretty good quarter for Tesla in the US, considering that fact alone. Now, Q4 tends to be the best quarter for Tesla in all of their demographics, but especially in the US. Which, I mean, if you look at the estimate Troy Tesla has for deliveries in the US for Q4, it's 165,735. This would be about 5,000 vehicles lower than Q2. I don't think that makes a whole lot of sense. And if that truly is the case, if we get a low delivery number coming tomorrow, maybe 480, 485, 490,000 deliveries, then the US likely seen some big weakness. And that's not exactly good for the economy and not a good sign for the consumer here in the US, albeit considering China has some really bad data right now. China's in a really rough place, and if Tesla delivered 10,000 more vehicles in China than the US, something is very wrong about that. So statistically speaking, deliveries should come in about 511,000 coming tomorrow. Now, given Tesla stock has fallen about 5% over the last 2 days, I believe this could set Tesla stock up for a 10+% move tomorrow. Now, I could be wrong. I don't want to come off like I have all the answers, because I obviously don't. This is taking statistical probabilities and plugging it into numbers that we already know for China, for Europe, the rest of the world, and Canada, trying to figure out what the most likely number is for the US. That's all we're doing here. Statistically speaking, it should be about 14% higher than China. Is it 10% higher? Maybe. Is it 7% higher? Maybe. That's still going to put you in the 500,000 to 510,000 range. Still way higher than 480,000 as per Wall Street's estimate. We were spot on the last 2 delivery numbers. So again, I don't want to come off like I know the answers, but I think we're going to be roughly correct this time around. If I'm wrong, I'm wrong. That's totally cool at this point. You cannot lose money based on this video, because you either have a position in Tesla or you don't. I personally have a bullish position in Tesla right now via options. If you guys want to come trade with us live in real time, check out that link down below in the description of this video. But I think Tesla stock could move up about 10% tomorrow, potentially as high as 15% tomorrow, if we come in around the statistical relevant number that we should, which again is 511,000 deliveries. Now, I do want to be honest as well. If Tesla stock was at $265, I would not be forecasting a 10+% potential move tomorrow. I would think the move would probably be smaller than that. But given we have fallen about 5% exactly over the past 2 trading days, you got to give some more leeway back to that, right? A 10% move from here would put Tesla stock at about $274 per share. I think that's actually pretty reasonable, given if we beat by, 30 or so thousand deliveries. That would be a pretty big margin, and really at that point, it's hard for the bears to make the argument that Tesla's growth is slowing down. How do you make that argument if Tesla massively exceeds analyst estimates? You probably need to see some firms raise their price targets and probably raise their delivery forecast as well. Tomorrow is actually very interesting because it's the first trading day of 2024. It's the day in which we get delivery numbers. And there's this dynamic that will take place in 2024 where money will come back into our markets. What moves stocks higher is fundamentals, right? A company beating on earnings, analysts raising price targets, EPS estimates rising. Those three things move stocks. The fourth thing that moves stocks that doesn't get as much credit is liquidity. So over the past really 2 years now, money has been exiting our markets more than it has been coming into our markets. People have been taking their money out of stocks, not putting money into stocks. That's why the indexes have done so well, because the money is really not coming back into our markets that much, a little bit recently. But what's actually happened is money has went from a Tesla, small mid-cap stocks, your average stock. It's went into big tech. So it's just, you've seen a shift of money from this area into big tech. Well, now what you might start to see is money going either from big tech back into small and mid-cap stocks, back into more of your average names. Or what I think is probably most likely is a lot of money that's on the sidelines probably gonna make its way into small, mid-cap stocks and interest rate sensitive names. Markets are currently expecting 7 rate cuts for 2024. That would put the Fed funds rate at 3.5 to 3.75% by December 18, 2024. Wall Street's looking at this and saying, number one, what's the odds of a recession? If we get a recession, that's going to be bad for interest rate sensitive names, even though rates would probably get cut 10 times. Maybe rates go back to 2%. Maybe rates get cut 15 times in total next year. And maybe we go back to 2%. Because, I mean, if we go into a recession, that's what would happen. But that wouldn't necessarily be good for the economy, for small mid-cap stocks. It wouldn't be good for a stock like a Tesla. But if we avoid a recession, like it looks like we are now, and markets price in 7 rate cuts, well, hedge funds and institutions, they're going to want to chase that. They're going to want to put money into stocks that will benefit from that. That's why this week will be very important as well. In terms of economic data, we're going to get a couple different data points from Tuesday, Wednesday, Thursday. But the big data that the markets really want to see is the non-farm payroll report. So 163,000 jobs is expected. The historical average for the U.S. economy is 160,000 jobs. So around 160, that's fine. 140, that's okay. 120, that's getting a little low. Anything under 100,000 job ads, that's where the markets might start to get a little fearful and say, if this continues, we're going to be losing jobs in just a couple of months, maybe 2 or 3 months. That's why you want to watch that data. More than likely, we come in maybe a little bit higher than 163,000. Honestly, I think we could come in at like 175, 180,000 jobs, and that would be seen as good news for our markets. Good economic data is good news. Bad economic data is bad news. That's the theme for 2024. As long as inflation continues to fall and the Fed does not need to see the economy weaken into a recession. For a while there in 2022, the Fed literally was basically saying we need to see a recession. We need to see unemployment spike. We need to see deflationary conditions start to appear before we even think about cutting rates. And now that inflation has fallen so much, we're at a moment in time where we just want to see the economy hold up and inflation continue to decline. That's the main reason why stocks have been doing well. I mean, this is telling you a recession is not likely next year. So if you want to listen to what the markets are saying, what the bond market is saying, they're saying likely inflation continues to fall, the Fed can cut rates 7 times, and the U.S. economy avoids a recession. If we start to price in maybe a recession is coming, maybe if the Friday's jobs report number is bad, then the markets are going to start pricing in like 10, 15 rate cuts potentially. That would be signaling a recessionary environment is coming. And when I see that happen, I will let you guys know. But just right now, it looks pretty Goldilocks to me. We are also likely to see potentially trillions of dollars head back into our markets here relatively soon. The average fund manager has underperformed the S&P 500 for the last 2 years now, and you cannot afford to do that again in 2024, or you will start to lose bonuses, you will start to lose clients, and start to earn less money. As a fund manager, that's not what they would like to see. A lot of this money could enter into a stock like Tesla, especially if we do beat the estimates for deliveries tomorrow. So whether we miss or beat tomorrow, that could have larger implications for how much money goes into Tesla over the next couple of weeks. This could set Tesla up for a rally well into the 300s if we get a number in line with what we should, around 511,000, or my estimate of 510,000, or really anything above 500,000. That could set Tesla up for a run well into the 300s over the next coming weeks, let's say 1 to 3 months. But to the contrary, if we somehow miss 480,000, maybe come in at like 485,000, I don't think that's going to be seen as some big, great news for Tesla. Tesla stock could actually decline on 485,000 deliveries. I think you need to be like 495 or higher to get Tesla stock to react positively. Maybe 490,000, maybe I'm being a little too conservative with 495, but I think you need to beat by a good little margin to see Tesla move higher at this point. We've seen this in the past where Tesla gives us a beat, but it's just not that big of a beat, and Tesla stock will still sell down. But I do think it's pretty clear Tesla's not going to epically miss as far as the numbers that we have seen. Besides the US, they've been very good. So an epic miss would have to, there would have to have been like a catastrophe for US deliveries to see that happen. If we did get some downside forward for whatever reason, I do think it is somewhat limited, and I do think we would find a lot of support around 241. That is where your 100-day moving average is, this orange line here, and that would only be a pullback of about 3% or so. So that still wouldn't be a great day, but I don't think you're looking at the possibility of 5 or 10% downside here. I think the risk to reward makes a lot of sense to the upside, and that's why I did go with some calls on Tesla. But again, I'm not a financial advisor, I'm not a financial planner, I'm not your dad, not your cousin, not anyone else that you should listen to. I share my thoughts and my opinions, and I go over statistics and what the numbers should look like based on data. But I don't know with a definitive what the number is going to be. With that being said, the bubble chart this week for Tesla's option activity shows a lot of call activity around 262.50. There was volume on Friday of about 46,000 with open interest of 6,500. The 260 call had volume of about 36,000 with open interest of 15,000. 270 call has open interest of almost 15,000 with volume of 23,000. And the 265 call seeing the most open interest at 25,000 with volume on Friday of about 30,000. The 240 put is right behind it with 27,000 for volume on Friday, about 3,000 less for volume on Friday than you see for the 265 call. And the open interest at the 240 put is 21,000, about 4,000 less than the 265 call. So if you're looking at just the bubble chart here, there is more positioning for an upside, move in Tesla stock, but not by a huge margin. It's not like this week looks super bullish on the option activity. In fact, if you look at the open interest here for this Friday, for January 5th, the open interest on the call side is 61.66%. Open interest on the put side is 48.34%. So there's only 1.66% more open interest to the call side than to the put side. As far as my own price prediction for Tesla, this is considering I'm correct at 510,000 deliveries. Really, anything above like 505,000 deliveries, I think gives you a similar reaction to what we're going to say next. So again, I think a 10% move from here is probably likely if we get 505,000 deliveries or more. if you're above 500,000, I think you get a good reaction. If you're around 510, I think you get a really good reaction, like maybe 7%. If we come in at like 500,000, 510,000, we might get 10 to 12%. Anything like 520,000, you could get 15% higher in Tesla stock. I don't think we're going to come in above 520,000 though. Really, 510,000 seems like a generous estimate based on where Wall Street's estimates are and some other individuals. So with that being said, that could put us tomorrow in the low 270s. I think if we, actually do get that kind of reaction, the follow through for Tesla could put us into the low to mid 280s by the end of this week. And I know that sounds crazy because Tesla stock is, $248.48, but that would only be a rise from here of about 14.8%. So it wouldn't be like that crazy of a move for Tesla. We're not talking 30+% in a week. We're talking 15% in a week. That could be, 2 really good days, 3 pretty good days strung together. Given I do think a lot more capital is coming into our markets, I do think Tesla's going to beat. I do think that means more money is going to go into Tesla stock than probably we have seen in a long time in this upcoming week. But again, I'm just putting my neck out here on the line. I'm just sharing my opinions. I could be wrong. So obviously don't base any trades based on what I'm saying. Good news is you won't be able to. You won't be able to YOLO in options based on what I'm saying here. You either have a trade or you don't, because the number's going to come out at 9 o'clock in the morning before the options market even opens. But I think that's a good thing, because if you are bullish, then you'll be able to actually see what the numbers come in as and get more confirmation. I was just very confident in, my estimate. So that's why I went with the trade beforehand. But it's always a good idea to wait and see, react instead of predict, as some would say. But that's just my estimate. Let me know what you think Tesla stock is likely to do here as far as the delivery number coming tomorrow, and what you think Tesla's reaction might be as far as the stock itself. Get crazy down there. Just let me know what you think. There's no right or wrong answer with this. It's only just predictions. Thank you for watching. My name is Michael Tyler. If you guys want to come trade with us, check out the link down below in the description of this video. You guys have a great rest of your day and night, and I will see you in the next one.